Flash loans are an incredibly important part of the entire DeFi ecosystem, and they're used in everything from collateral swaps to arbitration opportunities. However, there are some existing disadvantages. For example, most Flash loan platforms are not cross-chain capable. They can have somewhat high fees, and on top of that, there's really no long-term incentive for the liquidity providers. So Equalizer Finance hopes to change all of that by introducing a platform that is specifically created to giving Flash loans with low fees, cross-chain compatibility, and even better, providing a long-term incentive for those liquidity providers that keep their funds in the protocol and smooth out those transitions between bull, bear, and sideways market. Hey everyone, and welcome. This is Robert with Altcoin Buzz, and in today's video we are talking all about Equalizer Finance, which is an up-and-coming DeFi protocol specifically designed as a marketplace for Flash loans. So the first thing I do want to point out is this is up-and-coming. The app is not yet currently live. However, we are hopeful that it will be rolling out soon. Now, in this video, I know there's a couple things going on. So I first want to explain very briefly what a Flash loan is. Then I want to explain what Equalizer Finance does to make their version of a Flash loan unique and how it improves upon the existing system. So the first thing that I wanted to explain is what this entire concept of a Flash loan is and how it's different than a traditional loan. So with a traditional loan, you go to a bank or some kind of provider and they assess your credit risk and determine how much you can borrow. A Flash loan is different in the sense that your credit risk doesn't really matter because the way that the loan is designed, it's all governed by smart contracts. It's guaranteed that you will take out a loan and it will be repaid within the same transaction block. Now, if anything goes wrong, the loan automatically defaults. It becomes null and void so that no funds are lost. So because of this, you can take out a huge amount of Flash loan money, basically, that doesn't depend on your credit risk as long as it's able to be repaid within the same block. So what are Flash loans used for? There's a couple different use cases. The main one of these is arbitrage. Now, arbitrage refers to exploiting a price difference between different exchanges. So let's suppose that I'm trading ERC20 tokens, and let's just make up a number and say that basic attention token is trading at 25 cents on one exchange and 30 cents on another exchange. Now, if I was just doing this as a person, as an individual, I would have to buy basic attention token on this one exchange and then sell it at the higher price. However, I might only have $100,000 worth of money that I can do this with. So the profit that I would realize from that wouldn't be that high. On the flip side, if I can take out a Flash loan and buy $10,000, $100,000 worth of basic attention token on this lower priced exchange, I can then turn around and sell that entire amount on the higher priced exchange. So it really gives you an opportunity of magnifying your profit potential as well as creating really balance within the entire DeFi ecosystem by equalizing that price against various exchanges. So it works for you, it works for the ecosystem as a whole. Another thing that is really good about Flash loans is this thing known as collateral swapping. So when you do decentralized finance, you can typically over collateralize a loan and then you will mint some form of a stable coin. The issue with this is that your underlying collateral may be something that's volatile. If the price of your collateral is dropping really fast, then you're in danger of being liquidated. So with a collateral swap, what you can do is basically take out a Flash loan, swap your collateral in an existing vault for something that may be more stable and give you some advantages, a little bit more security. And again, this is all with Flash loans. It's all with that possibility of repaying everything in the same block. Alrighty, so this isn't a course or a tutorial on Flash loans, but I did want to give you just a couple use cases so you know why Equalizer Finance matters. But what is Equalizer's unique take on this? Why does Equalizer have a value proposition, and what is that value proposition that they are bringing to the market? And I think the best way to do this is by looking at their own official documentation and seeing what they think they do better than anyone else. So they are specifically designed as a marketplace for DeFi Flash loans. So we talk a lot of times in economics about specialization, right? And a company that does 100 different things can do 100 different things, but a company that focuses on one key aspect, one unique value proposition, is able to specialize, is able to tailor essentially their entire operation to being the very best at that service. And that's what Equalizer is going to try for. They're not trying to become a DeFi lending platform or an interest-bearing platform. Their key focus is on being the best DeFi Flash loan platform that they can be. And as part of that, they hope to implement low fees. Not only will these fees be low, but they will be dynamic fees, a wide, virtually unlimited choice of tokens. So this is one of the key drawbacks of existing platforms, is that they're mainly on a singular chain. A lot of those right now, especially running on top of the Ethereum chain, but what we will see here is that they're planning on introducing this for multiple chains as well. High scalable liquidity based on yield farming. So I'll get into some of the yield farming incentives in a little bit, but one of the drawbacks of other competitors is that there's really no incentive to provide liquidity long term. It's kind of just people moving their capital, moving their funds around, and finding the best short-term interest rate. With Equalizer, they plan to introduce a system that incentivizes people to keep their funds in the protocol even during a bear or a bull market, so that the stability is there no matter what. And then, as I said, multi-chain and cross-chain capability. So with that being said, I like looking at the official documentation here of who Equalizer believes their competition is. And when I say competition, I want to be clear that I'm a big fan of decentralized finance, and I think different protocols and platforms all have something to offer. So when we're going through this, it's not meant to put down on any platform at all. It's simply to illustrate the difference between what the focus of Equalizer is and kind of the focus of some of these other platforms, so that you can decide what system is right for your specific needs. So with Equalizer, their core business model is this flash loan service. Now, that contrasts, there are other platforms that do offer flash loans as well. However, the key difference here is that this is their core business model. For example, Aave is more of a long-term lending and borrowing platform. KeeperDAO is arbitrage and game theory, DYDX leverage trading, and Uniswap obviously is a decentralized exchange. Now, this is something that I really like here. Their fees are dynamic, which means that they are not fixed. And here's the key thing, the incentives for long-term liquidity providers. So on all of these other platforms, you really don't have an incentive to keep your funds with the platform. If you can get a better rate somewhere else, you're going to switch and try and get that better rate. But with Equalizer, there's an incentive system to try to keep you to have your funds there. So it provides that longer-term stability. So since it's one of its key value propositions, I did want to zoom in a little bit on Equalizer Finance and this idea of incentivizing long-term liquidity providers. So the issue is that during times of volatility, people will try to take their funds out, which, you know, is self-interest. Obviously, they want to protect their funds, but as a whole, it's not good for the market because then liquidity drops. It can be hard to do various things. So what they want to do is they want to incentivize people to keep their liquidity in these pools even during times of high volatility. So what it says is that to level and smoothen out liquidity over more extended periods, Equalizer is introducing a special reward amplifier scheme dependent on the duration of the staking cycle. The longer the LP stakes, the higher the reward amplifier goes, and the system will reset to simple yield if an LP wishes to remove their funds. So basically, you're not just getting rewarded for depositing those funds, but there's also an incentive for keeping those funds staked for longer periods. So it's a function of not just how much you stake, but also how long you stake, and kind of that reward goes up the higher that you stake for. And another thing that I wanted to zoom in on that I mentioned just briefly is the flash lending fees. So the fees with Equalizer are dynamic, that vary between 0 and 1%. This range can be altered in real time through a decentralized governance model. 90% of these fees go to liquidity providers, and 10% will go to the treasury to finance basically future development. So this distribution can be changed through decentralized voting from a maximum of 50-50 to a minimum of 99-1. So I just did want to zoom in on those two specific features because I think those are two of the key features of the platform where it really differentiates itself from other platforms, both in those dynamic fees as well as those long-term liquidity incentives. So kind of just going through the rest of their key differentials here, we've got infrastructure. It's tailor-made for flash loans, starting with the Ethereum blockchain, however, will be compatible with others as well. Any supported token on any compatible chain. So again, we really see that differentiation here between Equalizer and those other chains. Multi-chain and cross-chain capabilities. And again, Equalizer is going to be the only one that has that. So with that being said, one thing I always like talking about, and I have to be clear that it is not financial advice at all, but one thing I do like talking about is tokenomics and the roadmap. So I want to start off with the tokenomics here. And what we've got is the EQZ token on CoinGecko. Also, Equalizer currently trading at a price of about $1.21. So you can look a little bit at the price history over the past 24 hours, 7 days, 14 days, currently sitting at a trading volume of about 1.6, we'll round and call that $1.6 million. And then you can see that it is trading on a variety of exchanges as well, such as Uniswap, pancakeswap, and I will show you both of those in real time. So to trade on Uniswap, we simply click trade on Uniswap, and to click pancakeswap, we obviously click trade on pancakeswap. And what you'll see is that it will pull this up for you, and it will say that you are importing a token. So it's incredibly important to make sure that you are interacting with the correct contract address, and it will give you an option of converting from a BNB to that token, or if you want to do the same thing on a Uniswap, you obviously have that option available to you as well. So with that being said, I did want to briefly cover the roadmap and some of their partners. So right now, we are currently in April of 2021, which is the technical specifications drafting, public and private sale rounds, and really working on that user interface design. As we move into May, we're going to be looking at a web dashboard, backend and GUI development, flash lending vault, smart contract developments, yield farming, smart contract developments. And then by June, we're doing end-to-end functional testing. And what we're really looking at here is a launch date of July 2021 for that project deployment. So that's one thing that I always like to tell people. This is a project that hasn't started yet. You can see on CoinGecko, there's kind of some price volatility, and price, like I always tell people, is not necessarily an indication of value or an indication of what the platform brings to the market. You really have to judge them on their value proposition, the team, the services they offer. So as you can see, they do have some partners here. It's still very early. The project isn't yet deployed. Some people, like I say, some people will really like that. They'll say, hey, this is a chance to get in early. I like what they're doing. I see huge profit potential. And then other people will say, hey, hold on, I just want to wait a little bit to make sure that everything gets more fully developed. And either choice is completely fine. Anytime we're talking about cryptocurrency, your investment decisions are completely up to you to make. However, with that being said, I do think Equalizer does have a very interesting value proposition. They're going to focus specifically on flash loans, which is going to allow them to specialize and really hone in on becoming the best DeFi Flash Loan platform. They're going to have a number of advantages over existing platforms, especially including being cross-chain compatible, having those dynamic fees, and providing those longer-term incentives to liquidity providers to make sure that they don't immediately pull out the liquidity anytime there's volatility in the market. So, as always, it's important for you to do your own research, make your own decisions, but I hope you found this video useful. I would like to thank you for watching. If there's anything else you want us to cover or take a look at, be sure to leave it down in the comments below. As always, thanks for watching, and I'll see you next time.